I think everybody, including SEBI, Reserve Bank, and the Finance Ministry, is worried about the options and futures volumes. And I won't be surprised if something in that comes which can dampen the volumes and the sentiments in the market. See, I think they have 1 lakh crore extra from the Reserve Bank. I don't think they move from the fiscal deficit target of 5.1. I think they are also committed to 4.5 fiscal deficit for next year. So I'll be very surprised if they make any changes as far as fiscal deficit is concerned. We could see some bit of reduction in taxation for the middle class. There could be some schemes for subsidy or something of that sort.
Realistic expectations on the real GDP growth translating into revenue growth, which will be reasonable. I think FRBM targets and some stiff targets to be set for FY26. For FY25, we are working with 5.8%. I hope this glide path to lower down sharply to around 5.1% in the next 1 year. Impetus on, balance sheet expenditure of the government to, accelerate infra spending. Middle class, if there was not to be too much of tinkering in direct taxes, that would alleviate a lot of pain, and some additional allowances on the personal income tax, the plus rationalization of GST on a few items.
I think there are 2-3 ways to think about it. Firstly, from a government's ability to do things perspective, I think they're in a very comfortable position. So to that extent, if you look at the last 10 years, there has been a huge focus on infrastructure, on like anything to do with public Capex. So that focus, I think, will continue. I think there is room to do a lot on, say rural land and consumption. So I think there is a lot of room to do on this year, for example, given where the government's finances are. So things look pretty comfortable from that side.